Hey everyone, it's Luron here and welcome back to my channel. Guys, in today's video I want to go over Wish. Now this company has reported earnings on the 10th of November and they did beat on earnings. They beat on the earnings but they missed on the revenue. Now the miss on the revenue was just a small miss, just 1.57% miss. As you can see here, the previous earnings, they did beat as well. So that's a good sign. But if you look at the overall decline for this company since earlier this year, this company is down 85% right now. Now that's a major decline for a company that is producing decent amount of sales. If you look at the sales, for the past 5 years, we have stair-stepping growth in their sales. So this is definitely a company that is on the upside, and it's continuing to produce decent revenue. And once these growth companies produce this type of revenue with this type of stair-stepping growth, it's only a matter of time for it to become profitable. And that's what these big investors and hedge funds like to see. These companies stair-stepping, and ultimately the revenue will get caught up and bring the earnings per share in the positive side. So I have some faith in this company that it'll I know there's some takeover talks a few last year, I believe, by Amazon, and I think a couple others were having some discussion for takeover on Wish. But the future is still bright for this company. So I'm looking to take a position in Wish. I did some options before the earnings reported. Obviously, I didn't make anything on those because it didn't get the breakout that I expected. So Wish just did nothing. Basically, the IV just crushed, and those were some short-term options. So, like I said, didn't make anything on that. Took a small loss, but I'm buying some stock, some equity on this one. You see, there's a gap to fill here, guys. Right at 941, there's a gap right between here. Let me highlight that gap to show you guys right here. Now, as you guys know, gap fill is one of the most certain thing in the stock market. So we had also a little head and shoulder here that created the wedge formation just after the earnings. Now, after earnings, usually if these stocks will fail, they'll usually fail right here. Let me show you an example when we have this type of setup. For example, the last earnings, we had this setup here. Stock arched, earnings reported, it beat, but the stock broke this level. Here, the stock arched, didn't break the level, just broke out of the wedge formation, consolidated a little bit there. And this stock, in my opinion, will be looking to move to the upside. Now, your risk is simple, guys. See that line I have at the bottom there? We have 2 connection points. If this stock should break and close beneath this line, right around 497 and close beneath here, you get out. I mean, there's no reason to stay in. That's your risk level. But like I said, you want to get some stocks. Well, that's what I'm doing, buying some stocks, and I'll hold for this gap fill level. Now, in terms of the upside potential there, guys, we're looking at 72%. So just imagine that you're risking, if they should break below this level, we're looking at about 12%. We're risking 12% to make about 70%. So 7, 11, 7, 10, 70. So we're looking at about 7x on your money. So that's a decent return, guys. 7x. Like I said, I'm not buying options in this. I don't know when it'll fill this gap. It can be a week, it could be 2 weeks, or it could be a month where we just got some consolidation before we go to fill that gap. But I'm putting a trade on this morning, so it's November 12th, and in the morning at just about 7 a.m. Mountain Time, and I'm looking to put a trade on Wish. So I just wanted to share that with you guys quickly. Like you guys know, every trade that I take, I make sure that I have a risk level identified before I go into the trade. I have a target level that I've identified before I go into the trade. So that's the key thing for your trading plan, guys. What's your target level? What is the price target that you're trying to achieve? What's the risk level? Meaning, if the stock should break below a certain level, what's that level that will enable you to get out of the stock, so you don't have a much larger than expected loss. So risk level, like I said, is right beneath this line, and my target level is right up to fill that gap at 940. So that's the analysis, guys. It's a simple wedge setup. You know, we beat on 2 earnings consecutively. We're holding strong on the wedge breakout. So I expect this one to move higher, close the gap. I foresee it happening in a couple of weeks, 1 to 2 weeks, you know, so potentially by the 26th, the end of this month, we'll fill this gap easily. I mean, it could happen sooner, but that's the time that I'm giving it. So I'll put some capital down. I'm about to pull the trigger right after this video and just jump right into Wish, guys. So like I said, big decline, great upside. We had 2 beats on earnings, and I think the stock will go higher. Market beat also is, they have a hold based on analyst rating, but the price target that it has is $28. The average is $13. So the stock is basically way below what the analysts are calling for this stock. See, these guys are calling $13 on average, and that's decent, you know. So that's something I usually take a look at market beat to see what the consensus is from those top analysts, and then I usually bake that into my technical analysis to help with my decision making. So I'll wrap this one up, guys. And remember, guys, if you're new to the channel, remember to subscribe, smash that like button. It helps with the algorithm, helps the channel to grow. So until next time, peace out.